What's up, everyone? Interesting day in the market today, guys. Really interesting. We're going to have to go over some stuff here. There's some good opportunities to trade right now, actually. So if you guys have any views that you want to take, leave a comment in the live chat there, and I'll be happy to break down a trade for you that you can use the options chain to structure a cheap bet in whatever company you're looking at. But yeah, there's some really cool stuff going on in the options chain right now. The overall market, some crazy stuff going on. We're going to have to really spend some time here to understand this before we move forward. Because guys, like a lot of people are asking themselves the question, is this a drop or is this just a pullback? Right. And that's a question that I think a lot of people have. And without the right understanding of this, if we don't spend the time to actually break this down and really formulate our own opinions, we end up just in like a state of paralysis where when we have a view, we're not necessarily in a position where we want to take action on that view because we don't know enough about it. So my goal with this live today, guys, is to show you what's going on in the market from a data perspective, and then help you formulate a trade that you can take depending on what view you have. Do you think this is a pullback? Do you think that this is a drop? Do you think the market's just going to continue to rally and that this is just a little blip on the chart? I'll share with you my view. I'll share with you my partner's view, and we'll go from there, right? And if you guys have any particular trades you want us to do, you just let me know. And if you haven't already, make sure to subscribe. We go live every single morning at 10:30 a.m. Eastern Standard Time, breaking down trades, and I release a ton of content just on our page related to options trading education. So if you guys want, drop that subscribe, and we'll keep in touch, and I'll be happy to work with you. So if we take a look at the market, stocks are down, right? So here, let me just look at the SPY for a second. Right, a little bit of a bounce back early in the morning here, but if we look at the last 5 days, we're going down a bit, right? 5% down. Not the thing we wanted for. A lot of people thought we were going to break 300. I personally am of the opinion that we're not going to for a bit. I think this will be a little more than a pullback, but I'm going to explain to you a little bit of why that is, but also some of the trading opportunities that come up when we have this type of volatility pick back up. Right. So what we can see here, guys, really interesting. By the way, for SPY, we're still below the 200-day SMA. Right. So we are technically still in a downtrend. And if we look at the VIX here, VIX picked up by 10% today. So VIX usually gives us an indication of like what's going on in terms of like the volatility and fear in the market. And when we see VIX at these levels, it's like if VIX continues to rise, we could end up back where we were a few months ago. So we need to be extremely cautious of this. We need to be extremely, extremely cautious of this. So yeah, Paula, if you have a trade that you want me to take a look at, Paula, let me know a trade you want to look at and I'll show you how I break it down. Something I'm setting up is, I can't be using my live account to trade because all my information's there, but I'm going to set up a paper trade account so I can show you how to place trades live if you have any questions of that nature. But I'll show you how I break down trades, right? So this is my options terminal here, and I'll go through it with you. But first, I need to really get through this stuff on what's going on in the market because we're at a pretty pivotal point here. If you have a view you want to express, now's the time to express it, in my opinion. You'll be able to put on a good bet with whatever view you want to do. So like I was just saying, VIX is 39 right now, right? I think we saw 80 at the peak. We saw 87 at the peak, or 67, like that's really high, guys. Like that's really high. And if we get back to those levels, you can expect the market to take a huge hit again, right? Like as volatility usually takes these massive jumps when we see moves to the downside. So when we start to see this uptick in volatility, like we're seeing right here, right, it gets me a little bit worried. If this were to continue down this trajectory, we could see a big drop in the future. So the question now becomes, what do you think is going to happen in the near future? Do you think that volatility is going to continue to increase? Do you think that, this is just a pullback? And when you have that view formulated, how does that view compare to what the market thinks is going to happen? When there's a disagreement there, that is when you can place a trade, right? So one of the companies that have been taking a huge hit this week is the airlines, right? So if I type in like AAL, right? This is what's going on with AAL right now, right? It's down 5%. If I type in UAL, probably down another 5%. It's down 7.3%, right? If I look at Save, Save is down Oh, it's bounced back a little bit. It's down 2.64%. But if you look at all these companies, a couple things you'll notice is they're all down. The market implied volatility, so how much the market thinks these things are going to move in the future, which is a number that I extract from the options chain, it's right here, is shooting up for all of these companies, while the realized forecast it's gone up as well, but not as much, which is what we think is actually going to happen. So remember, we're always looking for like what the market thinks, what we think. And when we're trading options, we're always looking at the volatility, because that's how you actually price the options. And the volatility tells us two things, right? So this is key for people who are trading options. It's one of the first things I go over with our Academy members. The entire bronze section is dedicated to this, actually. It's what is volatility? How does it relate to how options are priced? And how do I use it to find market inefficiencies? And what you're basically doing is looking for differences between the implied and the realized volatilities in the market. So when you look at this number here, right, you say, okay, 119, what this basically tells us, if we pull up a calculator, what this tells us is 119 divided by 16. It basically tells us that the market thinks that this stock is going to move about 7.4% a day for the next 30 days. Right, so this is based on this is annualized, and we can break it down to a daily by dividing it by 16, because it's the square root of 252, I believe. It has to do with the trading days. So the market thinks that SAVE is going to move 7.43% per day, and we're basically saying that given our forecast, we think it's going to move 5.9% a day. So what this means is that the price of the options is higher than what you're going to have than what is going to be paid out from the stock moving. Remember, you pay a premium for the options. So what we're saying is right now, because of the increase in volatility, the market is overcharging for these options relative to how much this thing is going to actually move, given our forecast. Now, obviously, if we continue to see massive increases in volatility, we are going to be on the losing end of that if we're selling the options there to collect that premium. But what we're seeing is, based on our data, it's like, is that going to continue in the near future? Are we going to continue to see these massive increases in volatility? We'll see some increase, but is it going to continue to be this over the top increase? And that's where we're sort of like, I don't know if that's the case. And that's what we're seeing here, right? So right now we're only looking at SAVE, and I'll break down a couple of others after, but what you can see is difference between implied and realized forecast means there is a market inefficiency there. There is somewhere that the market is overcharging for options. And then what we can do is we can actually take this analysis a step further. We can take it a few steps further and go, okay, where in the option chain are things expensive, right? Knowing that helps us structure good trades, right? Just to break this down quick, a lot of people think that buying a call or a put is how you trade options, but it's actually not how you trade options. Most people will be like, oh, I think Tesla is going to go up, so I'm going to buy a call. If Tesla goes up, I'm going to make money on the call. But they forget a couple things. One, they forget that direction is only one factor that impacts the option. And two, they forget they pay a premium for the option. So if a stock's $100 and you buy a $10 call, not only does that stock need to go up, it needs to go up more than $10 in order for you to make money, because you paid for that option. So we need to keep that in mind when we're trading these things, that there's more to consider than just buy a call, sell a put. We can actually use combinations of puts and calls to build structures that let us take any view we want on the market. If we want to bet on it going up and falling within a certain range, if we want to bet on it, there's just so many different ways we can structure it. So to look at how we should be structuring it, we incorporate another piece of data called the skew. Now what the skew does, and that's actually right down here, this bottom left chart that I have for you guys here. So we're looking at SAVE's skew right now. So Spirit Airlines skew. And what this tells me is that what is the demand for puts and calls in the market? So I extract all the options out of the option chains, all the premiums, all the implied volatilities for them, and I visualize it in this chart to give me an easy, quick look at what the market thinks is going to happen. So as you can see here, and it's something you'll see with a lot of the airlines because they have big companies holding them, for example, is that there is massive skew to the put side. So this side is puts, this side is calls. And on the bottom here is the deltas. So like these are out of the money. This is out of the money here for the calls. And then on this side, we have the volatility it's trading at. Right, so you know how I told you this number up here tells us like a bit about what volatility, like the market implied volatility for this company is? Well, for different options, we actually have, like if there's more demand for out of the money, it drives up the price of those, and it's like trading at a higher volatility because it requires more movement for it to be profitable. And what we're seeing here is the puts are crazy expensive, the puts for this thing. There are people taking out some serious protection, right, which is to be expected in this, downtrending market. But if you wanted to bet on Spirit continuing to go down, the right move wouldn't be to buy a call or to buy a put, because the puts are so expensive, right? If you think that, but what we could do, right? So here's where I'm going to go over 3 different views that people might have right now. View 1 is that you might think that this is just a pullback. So we're going to continue to rally in the near future, right? We might have a little bit of a pullback, but within the next week, we're going to be back off to the races, rallying up. The Fed's just going to throw that money into the market, and we're going to be, back off to the races. So what you could do in that case is you could actually sell these out of the money puts, which are extremely expensive, and buy some of the calls, which are cheap, right? So you use the puts, which are priced extremely high because people are hungry for that protection, and then use that to finance your bet on the market going up. And if you're right, this would pay out massively, right? This is like a huge, huge payout if you're right, but you're also basically risking everything you put in. You're on the hook for these calls, for these puts. You have no downside protection. So if the market takes a huge plummet, you're on the hook, and you paid for these out here. But if you're right, it pays out huge. Now, let's say you think that the market's going to go down, and it's going to go down a good bit. What's another trade you could take, right? You think that this is a bear market here, right? You wouldn't want to just go out and buy these expensive puts, because the amount it's like they're so expensive that your risk to reward is all screwed up. So like the market could go down 30% and you're going to make like 3 times your money. And you're like, dude, I just bet on the end of the world and I made no money. I made 3 times or 2 times my money betting on the end of the world. Are you kidding me? Like that's a lot of risk to take on. The reason it's only going to pay out that much is a lot of people are buying protection right now. Even if they don't think the world is going to end, they, big funds have obligations to buy these things to hedge their positions. So what you could do is you could structure an out of the money fly, a 1-3-2 out of the money fly, right? So buy 1 of these, 3 of these, 2 of these. And if it lands somewhere in, you move your body strikes on it around to pick where you think that the end point is going to be for the downturn. And then you'll be able to structure a super cheap bet. You'll actually be able to get like 20-to-1 leverage on a lot of these things because you're selling these out here. And these are so expensive that it finances these in here. And it's really interesting. You can get a ton of leverage doing this. I was seriously contemplating putting one of these on recently on another company. But I was able to structure something else to get a pretty cheap bet with like 10-to-1 risk reward on the market going down. So that's my view. My view is that the market's going to go down. My partner's a little more hesitant to agree with me on that. So we have some difference there, a little inefficiency in our fund there. But he's mainly trading this volatility, like the things that I'm talking to you guys about. And this is what I'm doing with all the capital I don't have in that position. So, and if we look across the board, right, if we look at AAL right now, we're going to see that it's the same thing, right? Implied volatility, extremely high, realized volatility, moderately high, right? We're going to see a little bit of difference here in the skew. So like sometimes you'll see this little uptick here, and that happens when this relative action is really high. So if we go to StockTwits right now and we type in any of these companies, right, we go to AAL, for example, we're going to see a ton of people taking a look at AAL. Sorry, guys, I'm having a bit of a lag here. Yeah, this computer gets a little slow sometime when I have so much running. But yeah, guys, like the market came out with job news yesterday. We're down another 3 million people in the US filing for first-time unemployment. It's unbelievable that the market is rallying like this right now. I don't really understand exactly why. Like this is the law. Either there's something that we're missing, the Fed's pumping in too much money, or this is just the longest relief rally in history. Could be any of them, right? So let's take a look at AAL, right? You're going to see a huge uptick in people talking about this thing probably. So let's go to message volume. Oh, guys, sorry about this lag, but we're going to push through it, right? 40,000 watchers, right? Message volume took a little bit of a downturn actually. Might have been a lot of chatter last night about it then. But you should see a very high message volume. Come on, open up here. What the hell's going on? You want to show me the graph? Fine. Well, we can look here at market sentiment. So for AAL, we have 72% bullish on this and with a lot of watchers. So if even, let's say 10% of these watchers, so 4,000 people are trading options and, 75% of them are bullish, right? That would mean there's 3,000 extra contracts minimum being traded there. And if we look at AAL, the total volume of options traded, it's high, right? It's like 200,000. So it's not a huge difference, right? If we assume, we would have to have like about 20,000 options being traded in the retail space, which is possible for it to make this uptick. But we're seeing this uptick here, right? Short term, people are betting on this thing going up. So you could structure trades here, right? If you think that this implied volatility is too high, you could just sell an iron condor here, right? You could structure a butterfly at the money, sell that. It's a little expensive to be betting on the upside in the near future. But if you wanted to take a 30-day to expiration contract, buy an option there to bet on it going up, you could do that as well. Just remember, like we have a lot of action around this thing. The skew is as high as it ever gets. So this skew, we usually never, ever see this. Willis is saying that the top 10 stocks are carrying the S&P. Well, you'd have to look at the composite of what makes up the S&P, right? Like there's a good amount of stuff in there. If you can give me a little more detail, I'd be happy to look at it with you, or we can chat about that in the group. Top 10. Yeah, well, if you look at their top 10 holdings, these are huge companies, right? You have to look at what percentage they make up of it. But yeah, like a lot of small companies are taking hits right now. A lot of the big companies are probably doing a lot of the carrying, right? Like a company like Amazon, if that's a huge holding for them, I think Amazon's like one of the only green companies today. Let's have a look. Oh, it's down. It's basically flat. Amazon's basically flat today. But if you look at the price chart for Amazon, like they did pretty well, man. They survived this thing with minimal stress, which is really, really good to see. But also to be expected, of course. No good trade on Amazon though, unfortunately, right now. Let's see about Apple. If there's anything. Yeah, see, like you know what? Most of these big companies are being priced pretty efficiently. They seem to have pretty predictable revenue streams. They seem to not have a ton of inefficiency like what we would get in another space. So I don't think there's a huge trade here by any means. But guys, that's what I wanted to do that market review with you guys, because this is unprecedented times, as a lot of people say, but there's a ton of opportunity here, right? If you understand how to trade volatility, which is, if you're an options trader, you need to understand this stuff. This is what options are used for. If you just want to trade the direction, go trade the stock. There's nothing wrong with it. The stock is meant for direction. You have a 1-to-1 correlation with up or down movements in the stock. But when you buy an option, you now have this curviness to it that comes from like theta decay, from vega and gamma, and you have direction, delta in there as well. So you need to consider these things. Like this information that we're looking at here, this is all information that I built out for myself with my partner, right? We didn't build this just for fun to look cool and have a terminal. We built this because this is information that we need to do this. If you talk to a hedge fund manager, if you talk to like an actual 8-figure options trader, this is the type of stuff they look at. They're looking at the implied versus realized volatilities. They're building out models to test what happens in the future, to see where the market thinks things are going, and how to structure trades to take advantage of market inefficiencies, right? The game never changed. It's all about buy cheap, sell expensive. Same thing in the options space. Find cheap options, buy them. Sell expensive options. It's not too complicated once you know what to look for. And these are the key pieces of information. So that's my breakdown of the stock market for today, guys. I'm really interested to see what happens between now and Monday. I have no idea what to expect. This is going to be some wild stuff that goes down. So if you guys want, I can make more content on this stuff. Make sure to subscribe if you haven't done so already. And I'm going to see you guys tomorrow morning, 10:30 a.m. again. We're going to pick up on this, and then we're going to go over some trades that, if you have anything you want to hold over the weekend, you guys just let me know, and I'll be happy to do that. Hey, Paula, if you have any questions for me, man, I hope you're still here. Shoot me a message. I'll be happy to talk to you about this stuff. Like, this is the level you need to get to really be competitive in this game. And we're building out the biggest online archive of free options education for everyone. So I'd be happy to give you a sneak peek at that. no stress. Just remember, man, this is a really competitive game. For everyone in this chat right now, trading is really competitive. If there's things that you're not understanding, there is somebody on the other side of your trade who could understand that. And that puts you at an information disadvantage. So fall in love with the game, go all in, learn everything you need to learn to make it. And if you're not able to do that, find a game you do love, right? It doesn't need to be trading, right? If you're just here for the money, it's going to be a bad time. You got to love this game. You got to love trading because the odds are the person on the other side does. Like something I realized not that long ago, I'll share this with you guys quickly. Something I realized not that long ago, or something that I realized about 2 years after starting to trade was when I first got into it and I went online, I'd see places like StockTwits and all Stockhouse and all these online forums and Facebook groups, and I'd see people posting these really, really in-depth analysis, and I was like, wow, my goal is to be like those guys, right? The guys talking about like breaking through this, hitting this support, right? Next support is at 270, support after that's at 268. If we keep breaking through these, we could, and I'm like, wow, these guys know what they're doing. This is a serious in-depth analysis. And, I always wondered, I'm like, we know that 90% of people lose money. Like, where are they? And the belief that I held was the 90% losing money were like, I don't know, my parents who just like gave their money to some guy to invest for them. And like, they don't ever look at it. And it's like, those are the people losing money. They're just like throwing their money at the wall, hoping that something sticks. And what I realized after a few lucky encounters, so like I would have never, I spent 2 years with my partner doing technical analysis when we were trying to really make it in this game. And we never would have changed into a data-driven approach if we hadn't, it never crossed my mind that we were doing the wrong thing until the first time that I actually met a hedge fund manager. And that conversation really changed my perspective on things, because when I told him what I was doing, he basically laughed in my face. And he told me that technical analysis is 1% of the analysis that professionals do. All it does is tell you a little bit about where you can enter and exit, but it's 1% of what the pros do. And if you want to make it in this game, you need to start learning about quantitative trading. You need to learn to apply data to the technicals to make it evidence-driven. And then you need to actually combine the data with your intuition to be able to get creative and start structuring trades that take advantage of the market inefficiencies. And that's the way that you actually get to the top in this game. And as I started going down that path, it became clearer and clearer that the people who were actually losing money were not people who didn't care. It was actually a lot of times the people who really cared the most, right? It's just that the energy they were putting in and the effort they were putting in was into the wrong thing. They were putting in enough work, putting in enough effort, and I see them every day and it hurts. And that's why I do these lives, but they're just putting it into the wrong spaces. They need to be learning more modern methods of trading, right? Technical analysis was something that solely, it worked directly back in the 70s and 80s before computers really picked up. But in today's day and age, that's changed. It's changed. We now have technology that can run, think about this. Why do we have computers that can do 1 million processes in 1 second and we use all that power to draw a line on a chart? Well, the answer is that the big guys have not been doing that for 20 years. For 20 years, the big guys have been using computers to their advantage to improve their trading. And it is only now that that is happening for the retail trader. So Paula, if you're still here, man, I hope you're getting this. I hope this is resonating with you, because there has never been a better time to start becoming a trader. There has never in the history of trading been a better time to become a trader, because that gap between the pros and the average trader is finally closing. This is marketing 2.0. This is marketing 10 years ago, where the introduction of tools created this online world of marketing, this digital marketing landscape that created access for anyone, and anybody with a laptop could start a digital marketing agency. That did not exist in 2005. That did not exist in the time before that, but it now does. Now it exists. We actually have a landscape where the average person can take advantage of tools like the one I'm using here. There's other things online. I'll be releasing this down the road in the future for the public. It's in a closed alpha right now. This is literally marketing 2.0. Anyone who wants to use this stuff can do it, because now you don't need to know the coding, right? Before, if I wanted to do digital marketing, I would have to know how to build out my own CRM. I'd have to know how to build out all these ads. I'd have to know how to manage them. But now there's tools that help us do that, right? There's Hootsuite, helps you schedule your posts. There's HubSpot, manages your CRM, right? We don't need to know how to build these things anymore. There's tools we can subscribe to get access to them. And in trading, what that does is it takes care of all the data mining for you, right? It takes care of all the data in the back end and presents it visually using tools like this here. And when we have that, all we have to do now is work on the intuition and understand the outputs. So that's the situation we're in the market right now for the average trader. And remember this, guys, like when you're talking online to people, Just because it's an in-depth analysis doesn't mean it holds predictive power, right? The name of the game is predictive power. What I call these here is predictive power indicators, right? We got skew, term structure, relative action, relative skew, relative slope. You know, we have, look at this, like we look at how the implied and realized volatilities move together over time. We actually use all of this here, like some complex math to create our own forecasts. Like this is the type of stuff that traders need to either be looking at or have access to if they want to be winning in this game. It's the reality of it, because if you guys don't have access to this stuff and it holds predictive power, somebody else does. And that somebody could be on the other side of your trade. This type of information, what it does is it lets us take creative views and make sure that we're on the right side of the trade. So spend the time to learn how to combine data with your intuition, and you'll be miles ahead of everyone else. Learn to price options, learn how to structure trades within the option chain, and you're miles ahead. A couple of people you can look at: Aaron Brown, that book by Natenberg is a decent starting point, and Yuan Sinclair. Take a look at those three guys. They've all written books. Aaron Brown is extremely active on Quora. Yuan Sinclair is extremely active on Twitter. So follow those guys there. Big shout out to them. Their books made a big difference in my life. And you'll be off to the races. You'll have a view on the market that 99% of people you interact with will not understand what you're saying, but that's a good thing. When it comes to a competitive game like this, you want to be doing the things that 99% of people look at you and go, this guy's crazy. What the hell is this guy doing? But the 1% that are actually where you want to be look at you with respect, right? So think about that, right? You know, the name of this game is not to take your $1,000 account and turn it into $1 million account. The name of this game is become a sick trader, become a great trader, either raise capital or contribute over time, right? Don't aim for the 1,000% a year, just aim to make money. The name of the game is, can I make money? And if you can make money, I'll promise you two things. One, you'll be able to do whatever the hell you want in this space. If you can make 30% a year consistently, you can raise money. No word of a lie. Your parents and your friends will give you money if you can make 30% a year consistently. So don't worry about making $1 million by turning your 1,000 into $1 million. Just raise 10 million and collect a 10% fee. You know what I mean? There's other ways to make $1 million trading, or grow your own capital and have fun trading. Be the best at the game. Kill it. Be the guy who makes money when everyone loses money, and be the guy who makes more money when everyone makes money. That's a great position to be in. You know, if you can make 50% on a small account, on your own account year over year, you could retire by 35. You could build a whole other career and still have this. So there's just so much room to maneuver here, guys. You just got to love the game. You just got to love the game and be willing to look at this stuff. So Paula, I hope you're still here, man. I hope you heard that little rant. Yeah, man. Thanks a lot, guys. I'm going to wrap it up there. You know, Wills and Daniel, I'll see you guys in the group, man. Take it easy, everyone. Have a good day. Hope you have fun trading this volatility.